Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the line with us today is a new guest to the program, Al Housego. He's the portfolio manager at Crystal Wealth. That can be found at crystalwealth.com. I'll further my introduction a little bit, but first off, Al, thanks for joining us on the program today.
Thanks for having me.
So, Al, you manage 4 different funds for Crystal Wealth. You're working with a good bit of money, and one of the funds is resource and precious metals focused. Another one's a bullion fund, and then you also have a factoring strategy as well as a hedge fund. I guess let's start off with a general thesis outlook on the market. With somebody being weighted towards bullion, that usually means that they're a little bit negative on the general equities. Is that the case at this time?
Yeah, I mean, I follow a couple of analysts and economists. Dr. Robert Shiller from Yale University, I mean, he's one guy that I follow fairly closely with his Shiller PE. Goes back to 1880, 136 years of data. It's a rolling 10-year price to earnings ratio. Right now, it's just showing that the markets are very high valuation-wise. It's only been higher about 3 times in history. Before the crash of 29, before the crash of 2000, before the crash of 2008, 9, and now. And it's implying a future return right now over the next 10 years of 0.2% per year. So that's something that I just can't recommend to clients. And we're trying to go market neutral, other than our bullion and precious metals fund, market neutral investments.
Yeah, going long bullion and the gold equities, especially a couple months ago, was a great contrarian play if you weren't interested in investing in the general market. At this point, you know, the market's been kind of topping off. It looks like if you look at the S&P as an example, for over a year, it's been bouncing around, but the long-term trend looks like a top. Most of these market events, we can look at 2008 or 2000. There was a catalyst that really knocked them down. Have you identified at this point what you might think the timing will be for the market to finally start heading south instead of continuing flat or going up?
Well, you never know what's going to happen. It could be a mistake at Fed policy. It could be a black swan that we really don't see coming. I mean, not many analysts saw oil dropping from 100 down to $26. I think that helps the economies of the world. High oil costs are a drag on economic output. So it's probably helping. I mean, that's a tailwind to growth, and yet it still doesn't look like it's helping much. S&P 500, I mean, I think I just saw today, the last 4 quarters have had negative earnings growth. Share buybacks have started to decline, even though they have been the largest single component of share buying over the last 5, 6, 7 years. I think that's helped elevate these PEs even higher. So I think they're probably falsely lower because of all the buying. I mean, you hear good stuff about the companies in the S&P 500. They've got record cash, but they also have record debt. I think some of these buybacks have been. Some companies have good, cash flow, and they're using real cash, and some are borrowing money, so that debt stays on the books. Rates are ultra low, which helps to fund and finance these buybacks. But if you're not putting your money to use for something that's helpful in the long run, like productivity gains, new factories, whatever, you're just financial engineering return, or PE, at least PE, a good PE number, price to earnings number, but it's not real. So what'll make it turn over? I mean, if you look at a long-term chart in the S&P, I mean, it really looks like it is rolling over. It looks like a distribution dome. Back in 07, 08, we topped and rolled, and it looks even more extended. but it looks like definitely a rounding top here. So it could be, who knows what will trigger, but something will. It always does.
Well, let me ask you this: with the market topping off, and you've got major investors, George Soros, public trades just came out, and he's gone short with, I believe, about a $400 million bet against the S&P at the same time as going long gold. Obviously, you're long resources. Are you going short the market?
Yeah, I'm actually short right now, one of my funds. So I have a couple of analysts that I follow. They have buy signals, sell signals. So we're short right now with a trailing stop loss. So I think the upside's limited. I mean, it could break out to the upside. I mean, that's the unknown. I mean, Fed policy could change. They could cut rates again. They could go QE, 4. I don't think they even have to announce, because I think QE3 was actually open-ended. They can go infinitely if they want to. So that's what could propel the markets up. Gold should react well to that, although it didn't react well to QE 1, 2, and 3. But I think there's a lot of latent inflationary pressure there, and I think gold's reacting to that. I mean, you see guys like Druckenmiller. He's put a sizable chunk of gold in his hedge fund. I've been following Eric Sprott for a long time, and he's been very vocal. Dalio, I mean, I think he's got a big position in gold, and I like his quote, or I'll paraphrase him. If you don't own gold, you know neither history nor economics. I mean, I think it's a good hedge against an eventual hiccup here in the markets.
I think a viable concern for many gold investors is, if we do have a general market crash, could we have a repeat of 2008? Now, circumstances are different in that in 2007, gold stocks were already on a 6 to 7 year tear, and so they were pulled down by the general market crash, whereas today, gold stocks, even after the last 4 months, are still depressed historically. Are you concerned as a gold investor and an investor in the gold equities that an S&P Dow crash could pull down gold bugs as well?
I mean, it can. But normally they would be inversely related. If the market's crashing, usually, I mean, the gold stocks can get hit early, but they tend to usually buck that trend. I think the last 4 years, the gold stocks have been absolutely crushed to historically low levels relative to the price of gold. I think they were grossly undervalued. We've seen one of the best bounces off of a bottom in history. I think that's a telling sign. I think this is the beginning of a major bull market in gold and gold stocks. And yet, even with this really good move off the bottom, I mean, we're up 75-80% here. We're still undervalued. But I think there's got to be some digestion of this up move. There'll definitely be a correction at some point. We might go higher in the gold stocks in the short term. But this next pullback will set the stage. I think, a lot of smart money is getting in, and I think they want to get in, at a lower price. And if it does dip, I think there'll be a lot of fund managers and smart money backing up the truck here when it does correct. And I will be one of them. It definitely, I think that's the opportunity. It's hard to be patient when it's running away from you.
Well, there has been a pretty incredible move since January, as you just pointed out. We put out a chart this morning via Palisade Research. I'm not sure if you got to see that, Al, but oh, fantastic. So it essentially just compares the bull market that we've had the last 4 months to the beginning of the bull markets in 2008 and 2001, 2002. We are a bit overextended, and you just alluded to a possible pullback, which we think might happen as well. But at the same time, gold stocks haven't been this cheap in 90 years, based on a lot of metrics, as they were back in January. And even if there is a pullback, do you think this is going to be severe enough of a pullback for people to even notice? I mean, are we going to have a 20, 30, 40% correction in these stocks?
I would love one, but Richard Russell said, the bull markets try to buck you off and take as few people up as it can. I think there's a lot of disbelievers out there still. You hear lots of market calls from analysts that, gold's going to go back down to whatever, 1,100, 1,000, 900 still. And yet you see huge buying in physical out there still with China, India, Russia. So I think there's a real backstop there. I think we might not get the pullback that we expect because the markets tend to never give you what you want. And if we got a 20% correction, people would say, okay, here we are. Now I'll buy when it gets, to the bottom, and it might run away on you again. It might be a shallow correction. That's my fear, is that we won't get the deep correction. If you look at 74, 75, I think the stocks pulled back about 77% from the initial leg up. So I think that was the strongest move ever. So I think we're, up until now. So everyone's, looking at it might be the same, but I don't know if we're going to get there. I hope so. But we might not. It might be a shallow correction and it runs away again and leaving a lot of people behind. That's my fear. So I'll be buying, I'll try to buy all the way down. Incrementally.
Well, it's Friday after market close, and just for fun and speculation, let's talk about how this bull market could end, which is probably 4, 5, 6, 7 years away. I've heard a lot of people shy away from predicting the gold price, and there's really no point in doing it because nobody knows. But let's just talk in very broad numbers. I would think it would be unusual for a market that's taken 5 years to come down from $1,900 to end anywhere close to $1,900, making me think we should have a much higher gold price. The HUI hit a high of 600 something. It bottomed around 100. We're back to 220 at this point. Any ideas just from looking at history as to where we might end up? Nobody can predict exact numbers, but have you given any thought to that?
Oh, yeah, lots. I follow Elliott Wave theory. Alf Field, he doesn't write anymore. He hasn't written for years, but, he thought the next leg up, which probably started in January, would be the longest and strongest move in history. And one of the guys I follow now, Ron Rosen, he's on 321 Gold. He thinks that the correction from the 2011 high, 1920 range, what's called a running flat correction, and if that's true, then it portends a massive epic move up in the price of gold. So if you look at the return line on from the bottom in 2001, June of 2001 at 255, the return line right now is 6,200 around the end of 2017, and that line keeps going up as time goes on. So price and time to get to the all-time, whenever it does peak out, the longer it takes, the higher it'll go. And I think that shows the latent epic amounts of money that have been printed in the world with QE, 1, 2, 3 in the States. Japan's printing $1 trillion a year. The EU, Britain, they all have money printing programs that buy their own debt. It's ludicrous. We have negative interest rates. It's insanity. Hard assets like gold, silver, platinum, palladium, all of them, but especially gold, have always been the winner long term over 5,000 years. There's no counterparty risk. If you have it in your hand, there's no counterparty risk. So it has to be the best defense out there. It is the greatest asset in the history of the world.
All right, well, Al, I don't want to take up any more of your time. Al Housego is portfolio manager at Crystal Wealth, which can be found at crystalwealth.com. Al, I know that you say you're very busy and things have picked up the last few months, but if any of our listeners really want to get in contact with you, is there any way for them to reach out?
Yeah, they can email me, or they can even phone me at my office. I'm in British Columbia, in the Okanagan. Do you want me just to give my number, or?
Yeah, that would be great.
Or email? Yeah, so my phone number is 546-0244, or you can email me at alh@crystalwealth.com.
Al, many thanks and have a great long weekend.
Thanks, you too. Appreciate it.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?